Welcome to the Goodman Report podcast. I'm Mark Goodman, principal of Goodman Commercial, a leading force in Vancouver's real estate market. Our firm is proud to be one of the top names in rental apartment buildings, development land, and commercial investment properties. Building on over 4 decades of commitment to advocacy and education, the Goodman Report is here to dive into the world of real estate, exploring the latest trends, market drivers, and insights. And along the way, we'll also introduce you to some of the most influential and fascinating voices shaping the industry. Let's get started. In today's episode of the Goodman Report, we have Brent Sawchyn. He is the founder and CEO of PC Urban Properties Corporation. Originally from Winnipeg, Brent moved to Vancouver in 1990 with his wife to take on a role as leasing manager at Schroeder Properties, then the preeminent developer of non-enclosed shopping centers. While at Schroeder, Brent worked alongside industry leaders such as Ian Gillespie, Eric Carlson, John Rees, and Larry Sunderland, all of whom would go on to establish highly successful platforms on their own. Before founding PC Urban Properties in the fall of 2009, Brent served for 7 years in senior executive and principal roles at both Westbank Projects and Anthem Properties. At the time he joined each firm, both were modest in size, allowing Brent to play a key role in all facets of the development process, from site acquisition, entitlement, and financing to construction, leasing, and sales. Today, PC Urban is a team of 31 professionals with a portfolio that includes industrial and multifamily developments across Metro Vancouver, the capital region of Vancouver Island, Calgary, and Edmonton. The company is the driving force behind 2 successful brands, Intra-Urban Business Park, a market-leading industrial strata condominium project, and Urban Flats, its rental apartment platform. PC Urban has also delivered award-winning mixed-use office projects. To date, the company has raised over $820 million in equity to support the development of approximately $3.5 billion in real estate projects. This includes 16 industrial developments and over 1,500 rental homes completed or currently under construction. Well, Brent, what an honor to have you here today. Welcome to the Goodman Report podcast. I think it's going to be a fantastic show today. We're going to learn all things development. You have been in the industry for 35 years. You currently lead up PC Urban. And we're going to cover several topics: policies, the challenges in the market, your specialization in rental and strata. But before we begin, I'd like to learn a little bit about yourself and how you got into the business.
Well, Mark, thank you very much for having me on the show today. This will be a fun experience, I think, for both of us, and quite looking forward to it, and honored and humbled that you sought us out to get our perspective on the industry, and happy to share what learnings that we've come by. So it'll be fun. I'm not really prone to talk about myself, hard to believe, as an only child raised by his mother, because I always thought it was always about me. But a few little quips for you. I'm originally from Winnipeg, grew up, my folks split when I was a little bit younger. My dad moved to Toronto. I was in Winnipeg with my mom, and I had an interesting, eclectic upbringing. My father ran the Royal Winnipeg Ballet and then was manager of rock bands and theatrical troupes, and we were in the carnival business, which led to the circus. So I had this background in the summer times. I've always been around really interesting, engaged people, but kind of no real idea what I wanted to do. Went through university, began in science because my mom thought I would be a dentist. Oh. And that flamed out after about 3 or 4 months when I realized that I was both not willing to persevere enough and certainly wasn't smart enough to be a dentist. Probably made my dad happy in the end. Stayed with it for a few years and got close to getting a degree in chemistry, then fell short of 1 credit and did a walk around for a few years. So my mom implored me to go back and finish school. And at 28 years old, I ended up with a arts degree in psychology.
Oh, that's what I got too.
Yeah, it happens to be like the world's best training to be a professional within this industry. After discovering that I wasn't interested or capable in a whole bunch of stuff, whether it was law or dentistry or medicine, I gravitated to trying to find out what I wanted to do in life. And my father had a great friend of his who was essentially second in command of the Richardson Empire, family business in Winnipeg. And Uncle Hugh Ellis, was very kind, and he spent 2 days with me. So I put on a suit, shadowed them around the Richardson offices. And at that time, they were into trading, oil, cattle, wheat, and a little bit of real estate. And after the second day, he looked at me and said, you're welcome to come here and work, and we'll teach you how to sell a basket of goods and trade stock in the investment business. But he said, if you really want to learn something about people and learn something about business, why don't you try going into commercial real estate? Spend a year, maybe two, because you'll have this great connection with all kinds of different people in different walks of life with different views and mindsets about how they go about their business. And then if you're interested after a year or two, come back and we'll give you a job. So I had no idea what commercial real estate was. Out of coincidence, a buddy of mine who was in the life insurance business met a guy who knew someone that had an opening at a desk at a brokerage business. And I got involved. And after about 3 or 4 days, I went, man, this is my calling. This is fantastic. The original office I shared was with a guy named David Dill, who's now in Vancouver. And little did Dave and I know, when Marcel said he had an opening for us, it really meant that we were in his boardroom. We shared a desk. We each had the yellow pages, but we had to share a telephone. So Dave and I would take turns making cold calls.
Was it a rotary phone?
It was a rotary phone in those days. And then if you made a phone call and you either got a busy signal or the business owner wasn't there, Dave would try to grab the phone from me. And I go, no, that doesn't count. I didn't get through. I got another call.
Wow.
So that became the impetus and kind of went away from there.
So you're dialing for dollars back then?
Always, yeah. Some people would say that I've always been a sales guy. My view is once a salesperson, always a salesperson.
And now fast forward, you lead one of the premier development companies in Vancouver. You've been doing this for 35 years. You've worked along some very big names in the industry, namely Ian Gillespie of Westbank and Eric Carlson of Anthem, who have gone their own ways and have evolved very profitable big companies. You pivoted and moved into rental, and strata is what you're generally known for. So today you lead up PC Urban. What is your main focus? What does your day-to-day look like?
What does my day-to-day look like? Interesting. Stepping back, maybe our main focus is when we began the business and when I started at Schroeder Properties, we were 100% unequivocally a developer of shopping centers. We built large, oversized shopping centers anchored by Safeway, Save-On Foods, or London Drugs across Western Canada. And at Schroeder Properties, Eric was the boy CFO, and Ian was the boy developer, and I was the boy leasing person.
So how old were you back then?
This would have been late 20s. 28, 29, maybe 30 years old when we were running that gig. We were fortunate to work with Rod, who an absolute genius. He was one of the senior principals at Dayon Corporation, which at the time in the late 70s and early 80s, I think, Vancouver-based, the largest publicly traded real estate company in North America, with people like Jack Poole. Rod started Schroeder Properties and had a philosophy and a view, I think, not so much to delegate, but if you had a little bit of a chutzpah and you showed a little initiative, he was happy to give you the free rein to learn from your own mistakes. And suddenly, we're jucking and jiving and helping to run the business and engaging with senior relationships, the people at Safeway and London Drugs and lenders and capital partners. So that experience was pretty fundamental to where we are today in PC Urban. The journey led through building, as mentioned, lots of shopping centers. After I left Schroeder, I joined Ian for a period of time at Westbank Projects, kind of the 7-year itch. And then I spent 7 years with Eric Carlson. And again, principally, we were focused in the shopping center industry. I began PC Urban in 2009 and kind of felt a little bit typecast. The Western actor in a bad comedy and a B-Western. So in those days, if anyone had a question about anything to do with a lease or how to negotiate something for a shopping center, I became kind of the go-to. It was like, I got to escape. I got to get out of here. And the business had also gotten a little bit more complicated and a little bit more constraining to be in retail development. Boutique, smaller firms like ours had a hard time surviving because the large pension funds and institutional people wanted to get into the business. And our anchor tenants became our competitors, if you will. So Canadian Tire no longer wanted to have a lease with a small firm like us, that they would rather own the real estate. So we became a little bit on the outs. And I remember going to Black Falls, Alberta, population 5,000 people, halfway between Edmonton and Red Deer. I wouldn't say quite in the middle of nowhere, but kind of get the drift.
Yeah.
And not really possible to get there in a day and back. Like you either had to Edmonton, you couldn't get all the flights to connect. And I'd be sitting there trying to figure out how a small little 10,000 square foot food store could coexist with a small little gas bar pad and a Tim Horton Donuts. And it would be about 2.5 or 3 years of work. And you make a couple $100,000, which wasn't quite enough to feed the family.
Yes.
And so I remember turning one evening from Edmonton and looking at my wife, Alex, and I said, we got to find another handle, another shtick. And we're going to find stuff that's only a 30-minute drive from our house in West Vancouver.
I love it.
And anyway, that discovery led to industrial condominiums, because at that time there weren't a lot of people doing it. We knew that we wanted to, in the context of Vancouver, if you're going to be a real estate developer, eventually you have to learn how to build residential. And we looked around, and of course, Eric and Ian were doing such incredibly great things. People like Scott Cressy and the Bozas of the world and Anis. Like, oh, wow, we can't compete in terms of traditional condo because the teams delivering condominium product here in Vancouver is like decidedly world class. But we got onto a theme that maybe we could do some rental buildings, and that would have been 2012, 2013, when a lot of other people weren't doing it yet.
And that was pioneering back then. Rare to be a purpose-built rental developer back then.
Yeah, I think so. I think at the time there was a lot of developers that go, why am I going to put up with that hassle? They probably viewed it as a little bit more pedestrian. I think since, and I know that we'll get into it a little bit later, but once the federal government in particular abdicated its responsibility for helping to facilitate or foster more forms of affordable or attainable rental housing, the development industry pivoted to things that are much more lucrative, which was building condominiums. And until recently, building a rental building was a lost art and a lost skill set. And if a few developers had built some rental buildings, in the late 2000s, early 2010s, most of it was a bit of an afterthought. Like, it's just a rental building. Let's build it. We'll tuck it over here for future generational wealth. Now it's become much more enlightened, more competitive. And I think as a result, the product that's now being delivered to homeowners is much better as well.
Now that you've been doing this for many years, are there any aspects of the business that you really like that you want to focus on? And is there any aspect of the business you'd rather stay out of?
Well, for a period of time, we had a pretty good gig going delivering office space, particularly smaller office buildings in the Mount Pleasant area. Would probably rather not discuss office in this particular environment, obviously, but I do think it's going to come back, and probably a lot sooner than we thought. I think there's a recognition in terms of people's social wellness, so to speak, and productivity. I'm one to believe that you're much better to engage with people every day and work in an office environment. But leaving that aside, I think that our firm at PC Urban has found a real passion and a real purpose in delivering rental accommodations in our city, principally focused in Vancouver, Metro Vancouver, and the Capital Region District.
And at your company, how many people do you manage? And what is your main role? What do you take on as your day-to-day, and what do you delegate?
As the elder statesman of the company, I'm kind of the go-to problem solver, if you will. The team's been together now for a long time. Sean Smith, for instance, our CFO, has been at the company now for 8, almost 9 years. Steve, who's our chief operating officer, is coming around to his 5-year turn. All of the teams got a lot of depth and experience. So I find that when I get engaged in stuff, it's usually because a problem's arisen that the team hasn't seen before. And so if something's brought to me to have a peek at, it's usually because I've made that mistake in the past, or I can point out and go, I think you should do this instead.
And do you give a lot of your staff free rein to make decisions, or does everything have to go through you? Is it more of a hierarchical structure, or do you let each leader within your company work in a silo?
I'm don't know if it's fair to ask me that question,
Uh-huh.
or you should ask the guys back at the
Oh,
office that
okay.
question.
Yeah, because the one thing I've noticed about the development industry is how
Yeah.
different the organizational structures are, because really you're trying to mitigate risk. And it's a risky business, and you're managing cash flows, and you're making big monumental decisions, addressing costs. Is this the right site to acquire? And so I know that some development companies, I wouldn't say micromanage, but they're very structured and there's a pecking order, whereas there's other development companies where there's more autonomy within the structure. And I always find it interesting how you can have different business models.
Yeah, for sure. I think, particularly in our industry and development, and sort of as I'm aware of in Vancouver, there are principles of firms that micromanage absolutely everything from picking the tile to the color to the toilet selection and the
Right.
flooring. And I'm not that person. I like being around the younger people in the office.
Hmm.
I've enjoyed watching their maturation and growth, and their evolution and the passion that they have also in real estate. And there's kind of like no right way to do any of this. There's probably like 5 or 6 things that you should never
Hmm.
do, right? But other than that subset, and short of kind of murder or losing time, there's really nothing you can't recover from.
Oh, that's a very good philosophy. Well, talking about recovering from, you've been in this industry a lot longer than me, but for me, it's been 23 years. I've never seen a cycle like this. I've heard the stories from my father, who retired 6 years ago. Some of those high inflationary times, interest rates going through the roof. It's been a shock for a lot of people in the real estate community of what we've gone through with rising inflation and interest rates and the lack of transactions. Until recently, there was a stall in the market. It was very hard to pencil out deals. Land and acquisitions don't make sense. How have you weathered the storm, and are you able to draw from previous experience, and are you able to have a more optimistic view of the next couple of years now that we have a liberal government that's going to be with us for a few years and that interest rates have shown that they've come off a little bit? Like, how are you weathering the storm?
Well, I think first and foremost, by personality, by nature, by the fact of the industry I chose. And I think the others within our sport, so to speak, are optimists. Like, if you're not an optimist in this business, then you might as well get out and go work somewhere else
Mhm.
because you're not going to survive. I do think it's fair to say, certainly on reflection, where we find ourselves now, like, I haven't been through anything like this before. I was at university in the early 80s when interest rates and mortgage rates went up to 19 and 20 and 21%, but didn't really understand the significance of that.
Mhm.
Lived at home, finishing university in Winnipeg, heard stories of people in Calgary who had a $100,000 mortgage and a $140,000 home, completely underwater, returning the keys to the banks. I don't think we'll get there ever. Certainly lived through high prime interest rates. That was one of the challenges that Rod Schroeder had in the early 90s,
Mhm.
where interest rates were suddenly 12 and 13% on a loan. And that became pretty fatal, which led to a lot of distress. Resolved itself pretty quickly. The tech blow up, I guess, 99 or 2000.
Mhm.
Again, that was like a 6 or 8 month correction. And of course, the great financial crisis, where people didn't know whether kind of to shit or steal third base and didn't know how long it was going to last or if we were all going to survive. But that kind of dissipated pretty quickly too. And I think at least as long as I've been in the business, and certainly in Vancouver, there was always a feeling and thought, if other communities, say Calgary or other parts of the world, when the economy went off, it felt like a light switch, and
Mhm.
then you were kind of done. There was no transactions, nothing would happen. There would be a real flight and fire sale. It's kind of never really happened in Vancouver before, because it always felt like if a light switch was going off in, say, Calgary, Edmonton, it was like a little bit of a dimmer switch here in Vancouver,
Sure.
and it would come back on. And I think that became a buying signal for a lot of people. In 2008, 2009, if there was a softening in the market, people looked at it suddenly as, hey, Vancouver's on sale. I'm back in. This has been much more perplexing. Certainly, none of us have been through a pandemic. We certainly didn't understand the consequence of going through a pandemic, what the fallout at the other end would be in the pandemic. It's interesting to follow. I guess history does repeat itself. So when there has been other global pandemics like we had, whether it was a Black Plague and the Spanish flu,
Mm-hmm.
kind of always led to geopolitical strife
Mm-hmm.
and cultural upheaval, which is now what we're experiencing. The shocking rise in interest rates, broken supply chain, move to populism, I guess,
Yes.
that fortunately we're not experiencing here in Canada. And it's hard to navigate that world. And it's become very difficult to, as you've heard from other developers, to get things to work and understand and pencil. And it's also really hard to figure out where the world is going still beyond here. I am heartened that we have a new government, proud supporter of Mark Carney. And if he's viewed as a technocrat, I think he has a lot of business experience. I think that will be good ultimately for Canada and presumably for our business as well. But first and foremost, let's make sure that Canada gets on a good footing. And if it does, then everything else will be fine.
Yeah, it's time to unite now and put the polarizing views behind us and get behind Mark Carney, and hopefully he can lead us through this tumultuous time. It is a very challenging time, not just for Canada, but globally right now. A number of factors we're dealing with. But, are you seeing the market turning around? Are there any telltale signs that you're seeing now that the worst is over and that we can get back to a more equilibrium in the market where projects pencil out and, we're not having these massive swings?
I think a little bit. A good friend of mine, Mark Hannett, Nicola, described it probably about a year and a half or 2 years ago, and I thought it was really wise. There was a time where we felt like we had positive returns, where everything seemed to be going up, and there's been times where we've had negative returns, where everything seems like it's going down. Analogy would be a little bit high tide and low tide. And it feels like we're stuck a little bit in a perpetual slack tide. And I have a feeling that that's going to go on for a little while yet. Nothing quickly going up, nothing quickly going down. What does that mean? Within our company, we're trying to do our best to stay focused on our guiding light and our purpose, principally developing rental apartment buildings, and try to avoid the noise. But at the same time, it's like scratch, fight, pull, really work hard.
It's a battle.
It's a battle all the way through. And I think the younger people particularly are having a hard time with that. Fortunately, because I'm a little bit older, I've been through some more trying times before. And I do find that some of the younger folks come into the office and like, when's this going to end? Like, what are we going to do? And I'm going, well, kind of get back to where all of us started originally. Like my conversation about Dave Dill and sharing the phone to making a phone call, right? Like, I think a lot of people within our enterprise certainly got spoiled by sitting back and things would happen.
You've hit the nail on the head there, is that for brokers, for example, that have been in the industry for 10 years, they've never seen anything like this. And it was a very frothy market. And, just by virtue of showing up every day and going to the office and through osmosis, you get business and you're able to put deals together. But what happens when there's a monumental shift in the market and the playbook that you were accustomed to doesn't work anymore? And I suggest that you have to look at this as a marathon right now. It's not a sprint. You have to learn how to tread water for long periods of time and stay connected to people and stay positive and be optimistic, because it can't last forever. But really, it's having grit and tenacity and being able to mitigate risk and loss until the tides turn. And I agree with you. I don't see any major changes in cap rates or values. It's going to be kind of the status quo for a while until we find our footing. But that's interesting to hear your perspective and how the younger people in your company are looking to you for advice on, how do we weather the storm? What are you hearing from your sales and leasing centers right now?
So, recent example, we've had success for a rental project that we concluded with one of our capital partners, Fiera Investments out of Montreal. That completed late summer last year in the Victoria area, and we got it 100% leased in only a few months.
Wow.
So, at rates a little bit higher than we had forecast. And I'm happy to report that when the last unit was leased in November, we're now almost in May. Only one tenant's moved out.
Wow.
So that's pretty telling.
So they like your building.
Like our building, there's stability. So I think there's a real undercurrent of, lack of a better word, real people that need real housing.
Mm-hmm.
We've seen maybe in the last couple of years where we had a lot of foreign student immigration to Canada, and federal government sought to reduce some of that pressure as it relates to housing. So maybe that's moving its way through the system and is
Mm-hmm.
becoming a little bit more, again, slack tide.
Mm.
And I think all of it would be fine. I think in the context of Vancouver, if there's some rumblings and concerns that rental rates have fallen a little bit, and we know the condo market's been a challenge, two key elements for me is like generally in Vancouver, we build 40% of the product delivers condominiums, a lot of which would find its way
To the rental pool.
into the rental pool.
Yeah.
Those clearly aren't being built. And I'm not sure of many successful condo launches, certainly not in the downtown peninsula. And so it's going to be a number of years before those units are able to deliver, which might have an impact on housing or the availability. The availability of rental housing, we've been able this year and last year to have more units delivered into Metro Vancouver, but there's kind of nothing coming behind us. There's not a lot of stuff that's going to be delivered in 2027, 28, 29. And so maybe we're having a bit of a softening now,
Mm-hmm.
but I'm more worried about the consequence of where pricing is going to go 4, 5, and 6 years from now.
Well, the Broadway plan, for example, and
Yeah.
this is where you got to dig into the details because there's a lot of approvals, but whether or not they actually see the light's a whole different story.
I agree with that. I would hazard, and I might get called out on this, but I think no more than 10 or 15% of those applications
Mm-hmm.
actually go ahead
Yeah.
to get built.
Yeah, that's a fair statement.
So if there's a perception that we have a lot of supply coming to address our housing crisis, not just in Vancouver, but in Canada, I think the crisis goes on. Like,
Mhm.
I don't think we're anywhere near getting out of this.
And do you see the softening rents as a result of more supply, or do you think that fatigue set in the economy and people just, particularly in the higher end market where, rents are not $6, $6.50 a square foot anymore. They've dropped to $5, under $5 in some areas, $5 a foot. Do you see that softening as a result of the economy in general, or do you think it's more because of the supply?
There's probably an element of supply coming at a relatively same period of time.
Mm-hmm.
But I think all of us are a little concerned that how much people can afford to pay, right? When I first moved to Vancouver, so Alex and I came here in first week of January of 1990 from Winnipeg. Imagine my good fortune. It's like 9 degrees, light drizzle, not 35 below. And 31 or 32 years old, I was kind of making $120,000 a year, which
That's
was
big money back then.
but it wasn't still outrageously huge,
Yeah.
right? And we bought our first home in Point Grey. It was like admittedly 903 square feet, but it had a
Mhm.
full basement, 8th and Sassmat. We paid $225,000 for that house. So young folks in our office about the same age are kind of in that same income bracket. But that home today is $2.4 million.
Yeah.
So I think that's a real concern in terms of trying to make our economy sustainable.
Mhm.
In Vancouver, it's a real problem.
Well, PC Urban over the years has been renowned for its approach to industrial strata. You've had a lot of success in that market. What changes have you made over the last few years to attract buyers to industrial and light industrial spaces in the city?
The first project we did in the industrial space, long story to get to the answer. The first project we did was in North Vancouver, and it was like 35,000 square feet, 8 units, had never done it before, and thought you're supposed to build it like a shopping center.
Mm-hmm.
And so it was 3 walls of concrete with a really nicely designed, built up storefront, nice articulation, colors, corrugated metal,
Mm-hmm.
elements of design on it. And traditionally, people in the industrial space, particularly in the condos, business owner would come by and after 3 or 4 months before it was finished, he'd go, how big? How much? When can I move in? Okay, it'll do. Instead, we found that we put a little bit more emphasis on the design and it accelerated the absorption and also our sale price. And we thought,
Found a niche.
found a niche. You don't have to just put a crappy pressed metal
Mm-hmm.
awning over the front door and hope for the best, right? And walk away. There's emotion in everything. So the next project we did was called Interurban Business Park. Nicola Wealth was our partner. Collective wisdom then was, maybe you could sell it for $250 a square foot. We ended up selling, I think, for around $315 or $300 a square foot.
Wow.
Interest rates, admittedly, were a little bit lower, but it caught people's imagination because it was different. And our communication on our marketing was different. We, at that time, took a page of what the residential people were doing in terms of brochures, communication, social media, websites. And, clearly people like BD and Conwest are absolutely brilliant at what they do. But I don't think at the time anyone was really paying as much attention. And then we looked at it and went, hold it, man, Interurban Business Park, that has a name that could run. So we did Interurban Mitchell Island, Interurban Brentwood, and it just continued. And it created a following. And we have had a lot of repeat customers. Our first project was probably 85% owner users, because if you can't find a house or housing in Vancouver, you got the same problem if you're trying to find industrial or a place for your business. And during the pandemic, that kind of reversed itself, which became the investor crowd. To your earlier comment about your Arnie Silber, like, why don't I want to look after a residential place or replace a toilet? And I just kick this guy out if he's not looking after what I like. And but that seems to be correcting now. We're seeing a return over the last few months of interest rates have come down. It's probably helped. I think some businesses and people are just ready to get on with life with their business or need to continue with their business. So we've had a lot of success lately on being able to sell, and we're continuing to stay true to the brand, delivering spaces for small and medium-sized businesses with a small handle line. It's too good to be industrial.
Oh, that's interesting. Do you outsource your marketing and sales to real estate companies, or do you do it in-house?
So we look after all the creative. With the industrial brand, Interurban Business Park's been pretty easy. We've done 15 of them now. So there's an element, it's kind of like the franchise manual.
Yeah.
Wash, rinse, repeat. Page 1, do this. Page 2,
Perfect.
follow this.
Yeah.
Whatever you do, just follow the plan and don't screw it up.
Okay.
So we put all of the creative and marketing, and then we put it in the hands of the commercial broker agents, and they do the rest.
Wow, I wish my clients did that for me. That's fantastic. You're spoiling them.
Well, maybe we just don't trust them to execute as well. Maybe I do micromanage. I'm not sure.
Well, that's great. And on the flip side, you're also known for rental, and your brand known as Urban Flats. You've had a lot of success in municipalities like New West and Vancouver, where other developers have struggled. What's your secret?
What is our secret? I think there's a view, first and foremost, we feel really passionate that everyone deserves a home and everyone deserves a good home. And particularly in the context of Vancouver, the whole discussion of affordability, and I think it kind of left 25 years ago. So what we're trying to do is create homes that are attainable for people. And I'm not sure exactly what the stat is, but if it was, generally in Canada, you're supposed to rent an apartment for a couple of years before you can go buy a house. That's beginning to change, particularly in places like Vancouver and Toronto, because it's just so bloody expensive, right? So I think, a cohort group of 45 to 55, and I'm going by memory on the stat, but like 42% of those people have decided they're just going to rent, forget home ownership.
But that seems to be the status quo in a lot of European countries where there's no expectation that you're going to own a home, and renting is the norm.
Right. And to the earlier comment, when rental product had traditionally been delivered here in Canada and certainly in Vancouver, it was kind of that afterthought, right? Like, I'm going to build it. They're only renters. Don't forget about it. We'll just tuck it away. And then we looked at it and thought, hold it. Like, why can't you have lack of a better term, a condo quality environment? So nice design, well looked after, proper countertops, some place that you would be proud to bring your friends over to, that would be nicely amenitized, doesn't have to be over the top, but amenitized and have sharing places that you would create a sense of community. And so there's a couple dozen proprietary elements that we try to put into each of our buildings, follow the urban flats idea, and really riffing on that comment that everyone deserves a home and everyone deserves a good home. And we're continuing. And so that approach, I think, really helps when we go engage with the municipalities and the approving authorities and our capital partners, because they get it. Because everyone's had the experience of living in a older apartment building. You walk in the front lobby and it smells like fish.
Yeah.
You can hear someone above you. You can hear the people next door. And so we're trying to do our best to be the white hat guys when we deliver this space. The other thing that we learned that I think has paid dividends at the approval authorities was a friend of mine, Mike Rosen, who was a planner, unfortunately passed away about 10 years ago from lung cancer. And I remember going to a meeting with him at the city of North Vancouver because we needed help in trying to get through the approval on a zoning project we were building. And much like every other developer, I would traditionally sit across a table from a planner, and then I would just get red-faced. And I'm going, oh man, these guys, they don't listen. They're not paying any attention. They're just stuck in the mud. And this one time we left, and Mike looked at me and said, that was awesome. I go, what do you mean? They're not buying into what we're talking about. He goes, no. They told you exactly what you need and what you need to do. Just not you're listening. Every time that you engage with them, you're like a bull with a red cape.
Mm-hmm.
You can't help yourself, right? But when you flip it around and pay more attention to listen and try to solve their needs and policy, then it became collaborative. And I think that experience has helped us in every municipality we've been with. And the team in the office takes up that challenge as well.
So how much of your energy is going toward solving a political problem? Because perhaps when you're dealing with the planners in the municipality, a lot of it may not make sense, but it's political. So are you now taking a different approach and saying, okay, I'm going to help you solve your problem so you can help me?
Bingo.
There you go.
There's so many, and I hate to call people within our industry out on the carpet, but man, I even sit back in some of those UDI meetings and engagements with the city, and it just becomes like a big bullshit session, which comes across as you need to do more faster so I can make more money.
Mm-hmm.
And really, certainly in the context of housing, this isn't about making money. Certainly the projects have to pencil, or else you can't get it financed and it's not going to work. But really what we're doing is trying to create housing for people to make our community sustainable and keep it going. And so are any of us, am I happy with policies that have been put in place? Absolutely not. I think a lot of it's absurd, but it's kind of the subset of the rules that we have to deal with.
It's the system we're in.
System we're in. And it's not necessarily the planner that came up with a policy on TRP, but someone came from council, thought it would be a good idea to help feel the people in the Broadway plan more comfortable. So therefore you have to work around that, because if we don't, we're not going to deliver any housing and our mess is going to get even worse.
It seems to me then that a lot of the successful developers in the city who are able to navigate that process really well. They're able to understand the community, take the temperature of the room. They're able to understand what it's going to take to appease the community and all the different bureaucrats. Often I find it frustrating that decisions are made based on the lowest common denominator, as opposed to the right path forward is to placate everybody, to have a consensus. And we saw that with the Broadway plan years ago when it was going through various iterations and different draft plans, and they were changing the frontage requirements and the pace of change requirements and the inclusionary zoning. Was it going to be 30% or 20%? Was there going to be DCC? And at the end, when you're watching the negotiations in City Hall and all the councillors, there was this horse trading at the end where it's like, well, I'll give you this if you give me that. And it wasn't based on any reasoning and logic. It was politically expedient for the various council members. And then what we were left with wasn't really the most elegant plan. And now you can see today that there's a lot of criticism of how the plan unfolded. But, I guess we could say at least there's stuff happening and that there's going to be development. But did it move forward in the best possible way? Probably not. But there's no alternative system for us to work with. And so what you're really doing is you're shining a light on the system, and you can't go in screaming and shouting. You have to work with them, is really what I'm hearing.
Yeah, the screaming and shouting left a long time ago.
Right.
Yeah, it just doesn't work anymore with anyone, right? And particularly the people that live within an area that you would like to build in, you have to understand that you're making a change. And people aren't really crazy about change. So
No, you'll affect, the view cone and the shadow, and it'll hit their garden at between 2 and 3 o'clock in the afternoon. And, their vegetable garden won't get enough sun. And, that's a problem.
yeah. And some people will go, well, I don't want a tower. Well, what's wrong with it? Would you be okay with? Well, I'm okay with 7 stories,
But not 9.
but not 9.
Mhm.
Well, where'd the 7 come from? I just don't like anything over 7.
Right.
Well, can you come by as we drive by and count those stories? And they can't really do it, right? But I think the reality is we are where we are.
But, anytime there's change, all these towers built decades ago, there was change then. There were small little homes in the West End, and then they put up a few towers. And back
Yeah.
then those were luxury. Now they're not luxury. They're affordable houses. So when people say, oh, they're building luxury homes, I'm like, well, what's luxury? It's got nice laminate flooring. Is that luxurious? It's got a dishwasher. It's got in-suite laundry. It's got nice fixtures. When does a new purpose-built building, when is it not luxurious?
Yeah.
And what is that definition? It's like we are critical of anything new that actually looks good and is comfortable. It's too much. We're spending too much money. It's not economical. But the reality is that any building that was built even 30, 40, 50 years ago was luxurious just by virtue of being new. And now it's our affordable stock. And one day the buildings that you're building today will be the affordable stock.
Yeah, 100%. Yeah, I think it's very interesting. I've been fortunate not to be in an area that's been that amount of monumental change, say the Broadway plan, because we live in the suburb of West Vancouver. No one's building a tower necessarily close to where I am, which is okay. And God help them if they try, because nothing ever gets approved in the city of West Vancouver, and they get called out for that. But I think certainly we could be doing a lot more. And it is interesting that people look back. Like, I bet you we'll finish our project across from Vancouver Hospital, 13th of Willow. We got approved last week at public hearing. It's 2 towers, 353 homes with childcare. And I bet you 20 years from now, people look back and they'll forget about who the author was.
Yeah.
They'll forget that there was any concern about it.
For sure.
Right?
Yeah.
And, a good example, just in our little city, you think about Mount Pleasant, that little industrial hood. Well, it was originally forested and it was rainforest. The Spanish and the British came here, went up False Creek, and they hived all those old growth trees because the lumber they used for the masts in the warships, and that was the best thing they had. They could more to move along a sailing ship in the military fleet. So it gets clear cut, and then it becomes an industrial area. Then it transforms and it becomes a residential area. And then some of those little houses get transformed, they get picked off, and they become little places of business. So now you got a little bit of this hodgepodge that continues to change and evolve all the time. Now we have policies not to have any more people living there, which is kind of where it started a little bit, right?
It's one of the coolest neighborhoods in the city. Mount Pleasant.
Yeah. And maybe takes me in a different direction, this discussion, but I wonder if one of the issues that we've created, probably within our industry to help regulate it a little bit, but also the policies around it, like take Mount Pleasant, right? There's new plans around Mount Pleasant, the industrial area, that have been put in place to make Mount Pleasant cool, if you follow me. But it's already cool. Like, don't do anything, right? Just let its natural evolution continue. Forget about this idea that you have to have 20-story of height and widths of businesses and the types of businesses so that we continue to have it cool. Like, you're buggering it up.
Just let it evolve naturally.
Yeah.
Yeah. A couple of years ago, you wrote an op-ed in the Globe and Mail to suggest removing the GST on new purpose-built rentals and to encourage supply. And the headline for your story was, "The Real Source of the BC Housing Crisis, Governments, Taxes, and Bureaucracy." And the feds ended up removing the GST on rental buildings, but then Metro Vancouver immediately increased DCCs astronomically. So what's your take on the policies coming from various levels of government, and what would you like to see happen?
Well, I think, first of all, probably a lot of people in Canada should thank me for being so instrumental in having the GST removed from new rental.
I thank you very much.
You're very welcome. Actually, I'm sure I had nothing to do with it. Just our article, the timing was really good. And yeah, so it is frustrating for sure. And as by way of example, there's a small project that we're campaigning in the Kerrisdale area. We've been at it now for a little while. It takes time to get through the approval process, which we'll talk about in a sec. But the day the feds came along and removed the GST, we saved $10.5 million off the cost of the project. It was like 180 homes. So significant, but
Sure.
not massive. And it was almost like the next day we had to give back 17 million. By the time city policies on TDM measures, transportation demand management, we didn't have any tenant relocation to deal with, but the DCLs, the Metro van fees, some price inflation, you're going like, this is absurd. Like we get something handed to the housing community by the feds and taken away at the same time and made actually worse. And it's frustrating, right? Like, case again on 13th, I think our total fee load approaches $18 to $19 million. That's before the property taxes go up. Until we show up to buy that property to develop it, Metrovan and the city of Vancouver has none of that revenue, right? And I still find shocking as we're trying to create more forms and everyone's screaming for more affordability. The various approving authorities have their hat out to get a piece of the action. And I find it really discouraging with Metro Vancouver. They're $3 or $4 billion over budget in terms of their infrastructure they're trying to build on the North Shore. Their view is that new development should pay for new infrastructure, even though the people that already exist benefit from that infrastructure. And I think a lot of it is those people that sit on the board of Metro, and I apologize if you guys are out there, but you're chickens because you don't want to increase the tax base on the residential burden. I'd be happy to pay another $500 or $700 a year, as other would, because the consequence is what happening is that to make new development pay with all these fees that continue going up, the people that are really being disadvantaged are the new people that we want to move to our community or that are looking for a new rental home. So in the case of the Broadway plan, if there's an existing tenant on the site, they can come back into the project and pay the rent that they were paying before.
Or 20% below the CMHC average, whichever is less.
Yeah.
Yeah.
And the people that want to move in now are disadvantaged because they bear the burden of having to pay an astronomically high rent. Otherwise, these projects don't work. The fees that we're paying on 13th, that amounts to almost $80,000 a door. It's before the property taxes, which means on average, everyone in the market component has to pay another $300 a month. That's pretty significant for a lot of people, right? And starts to add up. And, you know, an affordable component would rent for half what the market is. And everyone's still screaming for more forms of affordable housing. Why is my rent so high? Why can't you bring my rent down? Rightly or wrongly, it gets pointed at the development community. But man, there's just a whole line of people behind the developers and the municipalities and the provincial government with their hands out.
Well, that narrative is being lost completely. Maybe
I'm going to write an article about that next.
Yeah, I think you should. It's almost like the tenants many of which are getting that affordability component, is there income testing or is it a lottery system? You know, how are they determining? And what happens if their financial situation changes in a couple of years? Do they get the benefit for another 10, 15 years at below market rents at the expense of other people? Like, because really what's happening is the people who are paying market are subsidizing the below market, but often there's no difference in income between the lucky few who got the below market component rental. So it just doesn't seem to be a very elegant or efficient way of affordability.
I think that the benefit of hindsight, certainly in the context of the Broadway plan and our municipal government, is that they may revisit this, I hope. And I certainly understand the plighted people that have difficulty finding accommodations, the lack of affordability in the city. But some of those people are almost like pulling the lottery ticket. You know, if they've been in their apartment for an extended period of time, they probably have low historic rent, which is increased only according to prescribed under the Rental Tenancy Act. They have the ability of coming into a brand new project, which is going to be a nicer, brand new, larger. And in some cases, some of those people have gotten a check for $125,000 or $150,000, which is pretty life altering for a
Yeah.
lot of people, right? And it's the new arrival that has to bear that burden. We did a little quick analysis that if we got rid of all of the various fees on our project on 13th and we didn't have to pay property tax because it's 100% rental building, the market component would only come down to about $4.40 a square foot. So that means the rent's going from $3,200 for a one bedroom down to like $2,500 a month. Still not cheap.
No.
Because of the various burdens that's been put in place.
Yeah. With all these municipal government fees and policies, increasing construction costs and economic uncertainty, how are you actually making building rental work? Is it you have a low cost base because you acquired the land many years ago? Like, how are you actually making these pencil out?
It's a challenge. It feels like, apart from being a team of developers, we become a team of rocket engineers, because getting a pro forma and our modeling to work and a financial return that would be supportable by capital partners and lenders is really, really, really tough. And but when we look at it, if there's 10 levers to pull, we might not pull one from 10 down to 1 or vice versa. It's just like little increments all the way we go through it, much like sound in an equalizer to get the right harmony to work out of it.
There's not one magic bullet. You're looking at all the different aspects of the development process.
Yeah. Like maybe we, as much as I love the people at the planning department of the city of Vancouver, you got to be a little careful in terms of not always trusting the process. So first one would be, our mantra is not to buy a piece of property until we have it entitled and we have land use in place, to your earlier comment. Time is money. So when we close on the land's always a big component of it. And value engineering with our contractor partners, trying to forecast where the market is going, trying to understand what our capital partners would like to derive in terms of a return. All of those are super important. And when we begin a journey on a project, if we feel like we're within the ballpark, so to speak, we feel pretty comfortable that we can get it at least within the diamond in the infield. And then from there, we have a good chance of pulling it together.
Yeah, that's great. We all know that your business is very capital intensive, and you have had success partnering with Nicola Wealth, Aimco Fund Management, Kingset Capital, and Fiera Capital. And I'm wondering where you see the evolution of the capital partner moving forward, and how important are these relationships in the coming years?
Super important. So real estate has a voracious appetite for capital, certainly in the context of housing. If we're going to make a dent to deliver more homes in Canada, we need the bigger capital guys to help lean into this project with us. Some people would view it as the financialization of our industry. I often have this discussion with my father, but the reality is, unless we have Maple Lake pension funds and the pension funds and institutions and whomever else making more of a commitment to deliver housing in our Canada, none of this is ever going to get done. And as we talked about earlier, because of the uncertainty with interest rates and coming out of the pandemic, and now we have tariffs and a 3-year-old with a light switch who resides in the White House. The tariffs on, are they off? What are they? No one ever knows. It's just really hard for anyone to make a decision, right? So as a consequence, and for understandable, everyone has a mandate to do something, and everyone, lack of a better description, has a boss or someone they have to be responsible to. And it's just a really difficult time with not knowing where the world is going to be able to get capital to come together. So we benefit from wonderful relationships, as some of the people that you pointed out. And we are learning that where, as a developer, we underwrite for perfection, our capital partners want us to underwrite for certainty, which is really difficult to get the two to meet. And I think that's going to be the challenge, certainly for the next year, if not for a little bit longer, right? So maybe it feels like we're all living in Missouri, the show me state.
To conclude, you've been around a long time. You've weathered different cycles.
Not that long.
Well,
just for the record.
35 years in the business is decent.
Yeah.
And you've seen the highs, you've seen the lows, you've had big wins. I'm sure you've had not so big wins. What advice can you give to people who are in the industry, be it developers or anybody in the transactional based business, mortgage brokers, commercial brokers? It's a tough time. What advice can you give to perhaps new entries into the market? How to set themselves up for success in this uncertain environment where the business model and the approach that you take differs from 5 or 6 years ago when the market was frothy?
Yeah, so I'm a big proponent of obviously working hard. Maybe I work a little less harder than I did in my early days, just because at 64, you have a little less energy and enthusiasm. Still, lots of enthusiasm, maybe a little less energy. But I think there's a big element, not just where we are today, but one of my views in life is one of perseverance. You just stick with it, right? And keep going, right foot, left foot. Because all of the game's long. It's not a sprint. If you're 30 years old, it doesn't really matter where you end up at 32 or 33. By 35, damn it, I need to be a vice president. By 40, I need to have this role. Really, it's kind of where you end up at the end, right? And the legacy that you leave behind. And there's no race. Like, it's not a sprint as an element. And the other thing that, the only constant is change. And all of this too will pass over a period of time. And like others within the industry, in the earlier comment, being wired as an optimist, the cup half full guy, a good crisis always leads to, right? Opportunity. Yeah. And I do think that things, particularly with the view of how we feel about Canada as Canadians, hopefully with the leadership that we'll have in Ottawa, with a guy like Mark Carney and others, guys like Doug Ford in Ottawa, won't really talk about Danielle Smith right now, that this is a really interesting time for all of us to be alive. It's a fascinating journey, whether we've enjoyed all of it. But in some respects, I think that we will be spiritually rewarded for it for sure, because probably been a little too complacent over our period of time in North America, in particular in Canada. And all of this will lead to interesting outcomes, which I think is going to make us this may be where I get discussion on my years because I'm a little bit older. But I think we're all going to feel good about what we end up delivering and helping with our community and our country. And, here in the context of Vancouver, delivering housing, because we're all in it together.
Well, I got to tell you, your optimism is rejuvenating me right now. I feel a lot better. And you've made some really good points. And I'm also optimistic about the future. And I want to thank you for coming on the show. I learned a lot today, and I hope our listeners learn a lot. And we'll be following PC Urban for many years to come. And we wish you great success in your future endeavors. And I want to thank you for delivering homes. Thank you for building. Thank you for helping our community, because without you guys at the tip of the spear, nothing would get done.
Thank you very much. It's been great to do this, and maybe we'll do it again sometime.
We will.
Terrific. Thanks.
Brent Sawchyn, thank you for coming on. Thanks for tuning in to the Goodman Report podcast. If you enjoyed the show, be sure to follow us on your favorite podcast platform, give us a 5-star rating, and leave a review. And don't forget to sign up for our newsletter at goodmanreport.com for the latest listings, market research, statistics, and industry news. Follow us on X and Instagram at Goodman Report, on Facebook at Goodman Commercial, and on LinkedIn under my name, Mark Goodman. On behalf of the entire Goodman team, thank you for listening, and we'll catch you next time. This podcast is produced by Podfather Creative.